So we're going to talk about basically how your investment is protected when you invest with Stock.estate. If we could go to the next slide. If you guys wonder what is Stock.estate, who are you guys? Why did I join this webinar? On short, we are a very agile team that build a crowdfunding platform. We've got Vincenzo Vlad, our CEO. A round of applause.
Hi everyone, this is Vincenzo, and inside the Stock.estate team, I'm taking care of the project that you see each month on the platform and on the coordination of the team.
Thank you so much, Vic. We also have Alexandru Constantin, our CTO, the builder, the one who made it happen, the platform. Everything you see is alive because of him. A round of applause, everyone.
Thank you for the great intro, Andre. Good to, not see everyone again. Good to be here again in another webinar. And as Andre said, I have built a platform and I deal with everything that is tech related. So if something works or if something doesn't work, it's probably my merit and my fault at the same time.
Thank you so much, Alex. We've also got Lorena, our COO, the backbone of it all, the one that keeps us in check. Now, a nice round of applause for her.
Hi everyone, Lorena here. I take care of our brand and community, making sure everything we share is clear and useful.
Cool. Last but not least, I'm Andrei Kirvase. I'm the growth officer. My job is to make sure there's as many of you as there possibly can be, more people learning about us, and why not invest with us? Going to the next slide. Our special guest tonight is Oana Dragomir, our dear legal advisor, the one who, I'll be frank, got us a lot out of a lot of tricky situations when we first got our license, and for that we're forever thankful. Oana.
Hello everyone, I'm glad to be here with you. I'm the lawyer advising Stock.estate, and in respect of all legal matters, I'm in charge. And today, I will be very happy to discuss with you any legal aspects that may be involved.
Perfect. Going on to the next slide. For those of you who don't know who we are, I'll let Vic do the, of course, already famous Stock.estate introduction.
Yeah, as you may know, Stock.estate is our investing platform, is the first Romanian real estate crowdfunding platform. It's investing on the platform. We work in order to make it sure, reliable, and to have as many verified projects as possible. What can I say? That our platform, in the platform, you can earn passive income, and all the projects that is the matter of tonight are backed by secured collaterals. And Oana will share an overview of the way we cover the loans with the collaterals behind. Thank you, Andrei.
Thank you so much, Vic. Going further, I think we should basically jump into it. I'll be the Stock.estate, and Oana is here to actually tell us the law behind it. So capital, when it comes to real estate crowdfunding, is pooled with other investors, is allocated to a specific real estate project, and basically used for clearly defined purposes. This capital is usually used on our platform for the acquisition of land or property, construction or renovation costs, refinancing short-term development expenses, or you can imagine whatever else. We've had people borrow money so they can finish the saunas for a wellness center. It's different situations like this. This is not a company equity investment. Basically, you're not funding operations, marketing, or salaries. Your capital is linked directly to a property and a project timeline. Going on to the next slide. Doru, we also saw what you asked there, and we'll talk about it as we get on with our presentation, just so you know we're not ignoring it. What does collateral mean? Well, it's not a promise, it's not a brand name, it's not a forecast, and it's not future sales projections. So basically, we don't agree with you give us a plan of how the business is going to be and you make up some numbers and we're just happy with it. Collateral is legally documented, it's independently valued, and it's enforceable under a contract. Going on to the next slide. How a typical investment is usually structured. Developer brings a project, the platform performs the due diligence, a loan agreement is created, investors fund the loan, and the loan is secured by collateral. In most cases, investors are lenders, not shareholders. Very important topic. I think, Oana, if you could maybe go into a bit of what this means. So basically, it's a loan. It's not, I don't know, actions. It's not, basically, I meant acțiuni in Romanian, not actions, which is basically shares. So yeah, if you could go ahead into that.
Okay. Thank you so much, Andrei. I will shortly explain the structure. Basically, every investment you make is structured as a loan agreement. As Andrei mentioned, it's not equity and it is not a share purchase. You, as an investor, become a lender in this loan agreement. The project developer, the one who develops the project and presents on a Stock.estate platform, is the borrower. You, as an investor, conclude a loan agreement with the project developer, and I would like to mention here the fact that this loan agreement is also signed by Stock.estate, and in this case, Stock.estate may either act as a collateral agent or an affiliated entity of Stock.estate may be the collateral agent. Why I'm mentioning the collateral agent here? Because this collateral agent is an entity that it is involved in the structuring of the collateral related to your investment. So here I would like to point it out the fact that the loan has a fixed repayment calendar, basically being the reimbursement schedule that is Annex 3 to the loan agreement. You know exactly as an investor when the installments are due, because you will receive installments plus interest. How much goes to the principal, how much is remunerative interest, and if something wrong happens and a delay occurs, then also the penalty interest is mentioned here. These aspects are very important because in case of an enforcement procedure, a forcing execution procedure, executare silită is the term in Romanian, you have a document that is an enforcement title. Enforcement title in Romania means titlu executoriu. And in this enforcement title, you have all the information, the principal, the interest, the remunerative interest, and the penalty interest in case of default, and also the dates related to the reimbursement schedule. This means that in case you have problems with the project developer, the enforcement procedure will be very smoothly, because according to the law 244 per 2022, implementing the crowdfunding European regulation, the loan agreement and all the deeds, the agreements related to the collateral, in our case, maybe the mortgage agreement, the personal agreement, fideiusiune in Romanian, and also the corporate guarantee agreement, are all of them expressly mentioned as enforcement titles. So there are enforcement titles, titluri executorii in Romanian, and this is a major advantage in our case, because I will skip into our subject with your permission, because for example,
sure.
If you as a natural or legal person are if you grant a loan to a project developer, your loan is not an enforcement title against that project developer. This means that in case you as an investor outside the platform are granting such loan, then you will have your legal battle in court for 3-4 years, depending on the duration of the lawsuit. And at the end of this lawsuit, the judge will issue a decision stating the fact that your loan agreement becomes an enforcement title. So in our case, on crowdfunding platform, the law is very, it's in our advantage, because if you as an investor come and grant a loan through the platform, through the crowdfunding platform, then this loan agreement, which is signed on the platform, has, based on the legal provision or on Article 15 from this law 244, has power of enforcement title. This means that instead of going in court and fighting your legal battle for 3-4 years, you will have from day one enforcement title character. So you will have the main advantage through investing in through crowdfunding platform. This means that if you have an event of default means that the project developer, the borrower, does not pay on due time the principal and interest. So in case of delay, you can go to a bailiff, executor judecătoresc in Romanian, and to request to such bailiff to initiate the first execution procedure. And this bailiff will go in front of the judge in a procedure that may take days or even weeks. And in this non-judicial procedure, because it is a very formalistic procedure in which the judge verifies 3 aspects. Is your amount due? Is because we will put at the judge disposal the information related to the due dates according to the reimbursement schedule that is already an annex to the loan agreement. Is your amount certain? Because the legal provisions are requesting 3 conditions: exigible, due, and liquid. So is your amount certain? Yes, because you have the loan agreement signed through the platform, which is stating the amount. Is your receivable certain? Yes. So in these scenarios, the judge will issue shortly, in a matter of weeks, as I mentioned earlier, a decision. Through this decision, the judge is approving the first execution procedure against the project developer. And this is the main advantage between you granting a loan, and here I would like to point it out the fact that you as an individual or a company, you cannot grant loans professionally, because if you are granting loans professionally to project developers or any other legal or natural person, then you should observe the legislation on crediting. So there are specific legal provisions that require specific authorization, licenses. In our case, we are authorized by the Romanian National Supervisory Authority, ASF, in Romania. And through our authorization, we are entitled to intermediate the loan agreements. So this is the main aspect that I would like to point it out, that in case you grant loans through a crowdfunding platform, then such loans would be enforcement title, and you gain time, years, costs, because in case of a lawsuit there are costs involved, and also your chances to obtain a higher amount in the first execution procedure are higher. So thank you, and I will intervene later on specific matters, but I wanted to mention this aspect here.
Cool. Thank you for basically clarifying this, because yes, it does keep a lot of time being able to just have the enforcement title and just being able to go to the bailiff and just initiate that part of the procedure. It's not as fast as it could be, but it's one of the fastest execution times in Europe, if I do believe so, on paper. Cool. Going forward onto the next slide, we have the loan to value and why it matters. One of the most important risk indicators is loan to value, or LTV. This is why we always tell you to not go for the highest yields and just look at the bright, shiny number. Also, look at the different types of guarantees it has, basically collateral. This is what we mean by a guarantee. Uh, so the LTV compares the amount invested and the value of the collateral. For example, we've got a €500,000 loan, and it's secured by a property valued at $1 million. That is a 50% loan to value. Why does it matter? Because it basically creates a buffer for us, because there also will be some late payment penalties accrued. There will also be legal costs accrued. So basically, by making sure that we aim for a 66 loan to value, or maybe a 50, but it depends on the project itself. This is why we always tell you to invest smarter and make your due diligence based on each project itself, or on what it can offer. Going to the next slide. What happens if things don't go as planned? The dark day that nobody wants to imagine, but we all prepare for, and one of these that we already had. Well, these are basically the steps. The contractual protections activate, penalties and extensions apply and begin basically accruing. So yeah, it takes some time. At least it takes time to get our money back, but we would have accrued some interest in the meantime. So it wouldn't have been money just sitting. This does not mean instant loss. It means that there's a defined legal process that is enforceable. Because the investment is secured, investors are not relying solely on goodwill. This is what I meant on the previous slide when I said that we're not talking about promises or pretty numbers or stuff, projections. it's a real legal leverage to get our money back. The outcomes are structured, and of course, they're not improvised. If we could go on to the next slide. What protection really means and what it doesn't. Protection does not mean zero risk, guaranteed profits, or instant liquidity. Protection does mean a clear legal structure, defined investor rights, asset backed exposure, and risk that can be analyzed and measured. In regards to what Doru said in the question area, what is the estimated time for recovering money? Because in a previous webinar, and I do believe you're correct, Doru, we did estimate a time between 6 to 8 months. Do not take mortgage, takes 2-3 years at least. Yeah, well, it shouldn't. It shouldn't. But here's the difference, and maybe Vic can go deeper into this. There's
So let me take this one from Doro. Okay, I estimated 6-8 months in a previous webinar. I have to review that estimation in 12 months because we are learning that each court have different times and even slightly different procedures. So you have to approach in a way or in another way. And going to your point, yes, we have one late campaign, one of 56 actually, that is in this execution procedure. And just recently, we have with us on board another lawyer that is specialized on this matter that is supporting Oana that takes care on general legal matter for Stock.estate. And so we are strengthening this support, and now we are tackling this late campaign in a direct way. So my updated estimation is 12 months. We just last week submitted another updated letter to the court, and they have time to respond. Last time they responded in almost 2 months, so I'm not expecting they are responding before that. Even the law says that they should respond in within almost 2 weeks. It doesn't happen. So this is the point on that later campaign. We can go even more in detail on that. And sorry, Andre, to interrupt. Go on.
Yeah, no worries. Thanks for clarifying, because yes, we do have the legal leverage, but it's a continual process. Going further, onto the next slide. Basically, we'll draw up the conclusions and then we'll go to the Q&A section. So your capital is linked to a real project. It's secured by real assets. So it's not just a promise or an estimation of the market or, I don't know, projections, something that can be invented. Structure matters more than promises. Collateral creates downside protection, and transparency is more important to high returns. I can't stress this enough, even if it would seem counterintuitive for us to tell you this. But we do encourage you to take a look at the projects and do not take into consideration, again, very important, just the yield. Make sure that it's also secured by a good LTV, by a real asset of which you can see all the information of in the documents area, and you can look them up yourselves and basically have make that decision that way. Now, going on to the next Q&A slides, we do if you've got any questions, especially in regards to this subject, but not only, do not hesitate to ask them in the question area. So, is the developer's collateral dedicated? Oh, great question. Dedicated or exclusive to the Stock.estate loan in question?
So who goes? I go.
You go.
That depends. Yeah, usually yes. We ask for the first rank mortgage, and we don't allow anyone else to be behind us. But so this is the standard. But it really depends. Sometimes if the project is really big and there is in the middle even a bank, it could be an advantage because it means that the company it's solid is already financed by a bank, so we can join in that, and we may accept a second rank if the LTV is big enough to allow that. We didn't do that yet. So for mortgages that we have all of them first rank, but we do not exclude this possibility. So it's really project by project, the due diligence.
Yeah. If there are no other question, I think Oana, could you maybe tell us more about the ranks, so to speak, of collateral types, because this would also intertwine with this exclusivity question. Because if I might say, and you can correct me on this, there cannot be like a sort of exclusivity. There's just ranking, and
Yes.
rank matters.
Yes. Okay, I will take it from here. And basically, I would explain in relation to this question some theoretical aspects, but that theoretical aspects are very important in the forced execution procedure. And this way, we can better understand what means rank, what means the possibility to initiate the forced execution procedure. So, for example, the starting point being the question. In case of a first rank, you, as a lender who has a collateral, a mortgage on the assets on first rank, you have the priority to receive the amounts of money obtained during the auction of the immovable asset. But in case you decide to accept a project developer with an existing first rank mortgage over the assets, then in such a case, you can put a mortgage of second rank on the immovable asset. Here, I would like to point it out the fact that there is a distinction between the ranks from a theoretical perspective and the possibility to start the forced execution procedure. For example, even if I have a second rank mortgage, I can start a forced execution procedure against the project developer, or it may be a third case where I don't have a second rank mortgage, but I have a personal guarantee or a corporate guarantee granted by a natural person in the first case of the personal guarantee that is the owner of the immovable asset that already has a first rank mortgage. For example, X as a natural person is the owner of a project developer, and it has in his patrimony an immovable asset. And Stock.estate presents the project of the project developer on his website, and on the collateral section you will see personal guarantee. This means that the owner, the shareholder of the project developer, grants as a collateral for the funds gathered in the crowdfunding campaign a personal guarantee. A personal guarantee is a type of collateral that is concluded in front of the public notary, and based on this agreement, the shareholder of the project developer, if he's married, together with his wife. If he's not married, then he will expressly declare that, and any change will be declared, and so on. And to revert on our main point, he will state that he is granting the loans from the crowdfunding campaigns with his entire patrimony. This includes personal assets that may be immovable assets, movable assets, for example, immovable buildings, lands, and so on, even if those lands or buildings are already pledged with a first rank mortgage in favor of a third party, of a bank or a non-banking financial institution, and so on. And also the movable assets that may include cars, other vehicles, shares in companies, intellectual property rights, trademarks, domains, and any other amount of money. Here it is very important to point it out this fact. Any other amount of money which is in his bank accounts at a specific moment. For example, when he does not, when the project developer fails to pay the installment and an event of default occurs. So in this particular case, we have a personal guarantee granted by the shareholder of the project developer. In case that the project developer fails to pay and an event of default according to the loan agreement signed by the investors on the platform occurs, then the forced execution procedure starts. And if the bailiffs are interrogating the databases of the land registry and sees that this particular person has buildings, land already pledged in favor of the third parties, then the bailiff sends to the creditors a notice. And in this particular case, even if the bank has a first rank mortgage, the forced execution started by us, by the collateral agent in our case, cannot be prohibited. So the law grants to us and and other creditors that have personal guarantee as collateral the right to initiate the forced execution procedure. So you will send the notice to the bank. The bank will summon the project developer and this natural person, the shareholders of the project developer, and we'll ask him, okay, do you have any amounts of money to pay the collateral agent in the name and on behalf of all investors from that specific crowdfunding campaign? If not, I will join this creditor, and when the building or land is sold in auction, I, as a bank, because I have this first rank mortgage, I will take with priority the amount of money, and the other creditor, the collateral agent, on behalf of the investor from the crowdfunding campaign, can take the rest of the money obtained from the sale of this building. In addition, in case that this amount of money is not enough to cover the debt, then basically, when you have a personal guarantee, you do not have a specific order to force execute specific assets. So in parallel, you can find, I don't know, maybe a car. You as a collateral agent on behalf of the investors, you will be informed by the bailiff. Okay, look, we have discovered that it has car, it has shares, maybe listed shares on stock market exchanges, because also these shares can be forced executed. And in parallel, the bailiff will receive amounts of money from such kind of assets. Also, in case that this particular person has money in his bank accounts, the garnishment, poprirea in Romanian, may be realized, and in certain cases of personal guarantee, maybe the first amounts that are recovered are being the amounts of money garnished from the shareholders of the project developer bank accounts. And this is the conclusion. You, even if you don't have a first rank mortgage over that particular building, you can start the forced execution procedure, because the law does not prohibit you. And in some cases, as Andrei, you mentioned earlier, this can be a mean of negotiation, because the project developer would be very interested in returning the amounts to you as a collateral agent representing the interests of the investor from the crowdfunding campaign, instead of letting you to put in auction that building, because usually the banks already have in their loan agreements clauses stating that they can come together with the collateral agent in this procedure of forced execution. And also maybe in your case, when the LTV was 50%, for example, if the building has a higher value, then in this case, the project developer would be very interested in returning the amounts owed to the investors from the crowdfunding campaign, than to see in auction the building which has a higher value.
Yeah. So this is why basically we choose this type of guarantee, because it basically forces the business owners to try to pay us as much as possible. Now, having no further questions, we're just gonna wait a few seconds and see if anything else comes along. In case a bank has a first rank on the same collateral, I guess this will be made explicit in the investment opportunities on the platform. Where can this information be seen?
In KISS, in the key terms of investment sheet, there is a mandatory document that is requested by the authority that has authorized us, and also by the crowdfunding legislation. And in case that a collateral is brought, a description of the rank of the collateral, the type, first of all, the type, a mortgage, for example, and the rank of the collateral. I would like here to mention the fact that on the personal guarantee and on the corporate guarantee, because there is no rank. So if we are speaking about the personal guarantee, the equivalent but applicable to company is the corporate guarantee. Is the same rule related to the entire assets that are at the moment of the initiation of the forced execution procedure. The entire patrimony. So there is no rank.
Okay. All right. So Marius also asked us who holds the mortgage or security interest over the collateral. Great question. Oana, if you could help us.
Okay. Who holds? Basically, the collateral agent is the entity which is empowered to the loan agreement by specific clauses. Basically, it is granted and expressly mandate to the collateral agent to represent the interest of the investors from the crowdfunding campaign. So the collateral agent will sign in his own name, but on behalf of the investors. And basically, the rights related to the collateral are in the investor's patrimony proportionally on their investments. So basically, the collateral agent is signing the mortgage agreement, is managing this mortgage, is monitoring the activity of the project developer, and in case of insolvency or forced execution procedure against the collateral agent, worst nightmare, then it is expressly mentioned the fact that these collateral are on the investor's patrimony. So in case that something bad happens, we already have clauses replacing the entity that is the collateral agent, assignment agreements through which the rights and obligation of the collateral agent are transferred to another entity, or clauses that stating that the majority of the investors are empowering other persons. So in case of this structure, there is a mandate agreement based on the rules provided by the Romanian Civil Code, stating the fact that you as an investor are entitled, in case you want to, I don't know, to mandate another entity, you are entitled to receive all the amounts from the forced execution procedure related to collateral. So in your patrimony as an investor are the rights related to the collateral. There are no rights in the collateral agent patrimony. And here I would like to point it out the fact that there is a segregation of patrimonies. So one is the patrimony of the collateral agent, on which the creditors of the collateral agent cannot cannot start the forced execution procedure against any collateral. There are clauses stating the fact that any amounts recovered by the collateral agent are to be transferred to the investors proportionally, and after deducting and after the cost of the forced execution procedure. But these costs are also borne by the project developer. So the costs related to the forced execution are on top of what the project developer owns. So in case of amounts recovered, these amounts are to be transferred to the investors. The investors are entitled, based on the article from the loan agreements, corroborated with the articles from the Romanian Civil Code. So in this case, their protection is assured by the law and by the contractual provisions.
Yeah, to complete on the previous Alex question, we didn't have till this moment a second rank. We always went for a first rank. So this is a possibility that we can take in the future, but we don't have on our radar at the moment projects where we are second rank.
Cool. Now, who is the collateral agent? Is it Stock.estate? And also, very interesting question right after we answered this one. So, is it Stock.estate on short? Yes. In long form, and Vincenzo, you can correct me. We stopped using the special purpose vehicle. And
So
please
yeah,
do an
so we had
interview.
before this month, because we had an upgrade in our procedures, we have used another company of us as a collateral agent, because in the first understanding of the crowdfunding regulation, the same entity couldn't do both the works, the crowdfunding platform and the collateral agents. But starting to granting loans, we have had so many different situations, and we have interrogated the authority again under this question, and we have received the green line to have the platform as well as a collateral agent that is more natural in the flow, because that is the entity that grants the money, and it can be as well the entity that represent the investors in front of a court or a third party, or whatever it takes. And it links even with the next question of Marius, that is asking basically where the money are held. Is the money is in this special account that is a segregated account for a financial institution. So is held in a bank, in our case in BCR, that provides this special account for payment providers, crowdfunding platforms, even IFNS, non-financial institution, and the money are held in this account, and Stock.estate basically just organize the fundraising and disburse the sum when the campaign is at the natural end. If you want to add something, Oana, if I miss something on that topic, or we can go to the.
Yes, I just wanted to add, because it was very clear, the information. I would like to add basically some explanation related to any concerns that an investor might have related to his money, basically. We have to, because we have updated our agreements in order to better reflect the structure which involves Stock.estate as a platform in the role of the collateral agent, and we have responded to any concerns that might have an investors through specific expressly clauses in order to avoid any misunderstandings, any interpretations, and in cases of default, for example, in order to avoid any mismatch related to the amounts. And I would add two items: ring-fenced clauses, which means that we have two crowdfunding campaigns, two fundraisings campaigns carried on the platform, for example, and they are in parallel. So if I would be an investor, I would like to have it expressly mentioned, the fact that if I decide to invest in a specific crowdfunding campaign, then the collateral related to this specific crowdfunding campaign would be only for my campaign. And this means ring-fenced clause, stating the fact that this the respective collateral will not cover any other amount which could be due by the project developer from other crowdfunding campaigns. So if I invest in campaign A, then if campaign B is in default, then my collateral would not be used to cover the campaign B and the investor from campaign B. This means ring-fenced. In one matter. In the other matter is related to the segregation of patrimonies. I already mentioned the fact that the patrimony of the collateral agent is segregated, is a distinct patrimony from the patrimony of the investors. Because if I would be an investor, I would ask, okay, but in case of something happens with the collateral agent, how can I be assured about the fact that your creditors, I don't know, maybe suppliers, or even if it is not the case, an hypothetical question could be arise here. And in case of insolvency or forced execution procedure against the collateral agent, even if the collateral agent has signed the mortgages, the personal guarantees agreement, the corporate guarantee agreement, it is expressly mentioned in these agreements the fact that the collateral agent acts as a simple agent, and all the rights related to these agreements are born directly in the patrimony of the investors. So we have also inserted specific clauses in the loan agreement stating that in case that something happens with the collateral agent, I don't know, a forced execution procedure is started against him. It's very unlikely, but it is regulated there. It is regulated the fact that the rights of the investors to receive any amounts from the project developer in case that everything goes well, or from the forced execution procedure that has been started by the collateral agent against the project developer. For example, a building is sold, then all these amounts are going to the patrimony of the investors in the bank account of the investors, are not being kept in the bank account of the collateral agent. So this is a clause stating the fact that the collateral agent is not entitled to any amounts that are obtained from the collateral or from the project developer. So these are the completions, the add-ons to your words, Vincențiu, because the question was related to the moment when the amounts are transferred to the project developer, and I have added the scenario where the amounts are to be reimbursed, returned to the investors, and who is entitled to these amounts. The investors are, and these are aspects expressly mentioned in the loan agreement.
Yes. So to conclude, even if let's say the platform itself goes into a default, this special account is protected, and those are the investors' money that the company can't take or touch. And I think we missed another question of Marius of is there a separate SPV for each project? It really depends. Usually not. Usually we grant the loan to the main company of the developer, but really depends of the situation. There are some projects that a special purpose vehicle is made just for the crowdfunding campaign, but in the most of the cases we grant the loan to the main company of the developer group.
Cool.
And
Seeing as there is one more question, just as we were about to end. Any investment into a project listed by a platform has a potential risk, as we investors need to understand from the start. Delays can happen, or even worse, and that's perfectly fine. There's any risk with the Stock.estate platform as well. I'll just answer this straight away. We can go back to the slide. Yes, there are risks, of course, because any there could be an economical crash that targets, I don't know, Romania, and we could have delays that ways. What happens if the platform itself becomes insolvent? Well, this is an interesting question where I wanna, yeah.
Yes, here, thank you. Here, I would like to point out the fact that according to the crowdfunding legislation, every crowdfunding service provider, as is Stock.estate is, has the obligation to maintain prudential safeguards for covering any matters related to such cases. And in these cases, when the platform becomes insolvent, you must know, and also in the loan agreement, it is expressly mentioned the fact that in case of any event that can affect Stock.estate platform, the loan agreement is in force. So, in this particular case, the legislation obliges Stock.estate to transfer, as I earlier mentioned, to transfer any ongoing campaigns to other entity, to other crowdfunding service provider, in order to carry on the campaigns that are already open and in course. For example, you have campaign A, but you become insolvent. Then you notify your investors and you transfer immediately within 15 days all the agreements to another crowdfunding service provider. There is a transfer expressly regulated by the legislation, and also in case of already closed crowdfunding campaigns, then in such case, you as a platform, you don't have any involvement if Stock.estate was not the collateral agent. Here, I would like to make a distinction between two cases. When the Stock.estate is the collateral agent, then in such a case, we already inserted clauses in the loan agreement stating that an assignment agreement will be concluded with another entity, transferring the administration of the collateral through to this third party, or in case that Stock.estate was not collateral agent, as it was up to this moment. And in this particular case, for a closed crowdfunding campaign, there is no implication, because the reimbursement of the amounts due by the project developer is made through those segregated bank accounts, through the bank accounts of the investor. So in this particular case, no adverse negative effect would be involved. Also, in case that because in case of insolvency of the crowdfunding service provider, a notice to the authority is sent, and the authority is surveilling the transfer of the entire activity to other crowdfunding service provider or entity. So in this particular case, if Stock.estate was not the collateral agent, that it will not be any impact. Only in case that it is the collateral agent, then the transfer agreement related to the administration of the collateral is to be concluded, and that's it. So the investors are not prejudiced. So they are not negatively affected by such an event. It is very similar with the procedure of an insolvency related to a bank or a non-banking financial institution. So there is a specific regulated procedure supervised by the authority, which assures the fact that everything is transferred smoothly and in good order.
Cool.
Yes.
Thank you
So
so much.
basically, the law have thought about this possibility, and
Yes.
there is a procedure in order to have the investors out. But as a main point, Stock.estate is like a third party in this investment. So even if Stock.estate goes in insolvency, the main contract between the investor and the project is still in place. It's just the flow of money that will not be anymore administrated by Stock.estate. But with this special segregated account, everything is easier because those are the investors' money and can be moved out to another provider or to the bank itself or wherever is the case in this situation. So on this, this is the, I would say, the lower risk, the risk of the platform, because it's an entity that is well regulated and there are so many procedures. The main risk is always on the project developer because there could be defaults or late payments or other problems.
Cool. Thank you so much for your addition, Vic. Also, I want to thank Marius for your questions as well, as he thanked our answers. And yeah, I'd say that this was a good session as well. Now, the end approaches, and we're just going to be here for a bit so we can actually go through the opportunities that we have right now. So if we could move on to the next slide. Vic, do you mind sharing us some details about NBI for Victoria Homes, for example?
You put me on the spot every time you can. So yeah, we are closing this week the 3 opportunities of February. We have 2 opportunities actually from North Bucharest investment, both of them at 6 months period. One is with 50% and another one is with 10%, both backed by a first rank mortgage on apartments in collateral apartments that are already held from the developer here in Bucharest. And the third opportunity is Centrul Medical Maria, that is an hospital in Brașov that needs funds to develop the well-being area of the hospital. So we are doing this fundraising here as well. The interest is very interesting because we have a base of 40% plus a 5% cashback that you can reach if you invest some specific thresholds. All of them are vetted projects. We have analyzed all the documentation, and they are actually developers that we work on a long time relation, both of them. So we are pretty confident that we will not have a problem with them. I would say that's it. If you have
Cool.
a specific question, here we are.
Perfect. Don't forget that you can also chat with Lorena if you got questions beyond this webinar, and that you can do that by going to the chat box that we have on our platforms. And basically there you'll get in contact with her and she'll be able to answer every question. And if it's technical, it'll get to Alex, yada, yada, yada. You get it. Scan the QR code or just click the links themselves. Look at Stock.estate. Do your due diligence before investing. And last but not least, invest smarter with Stock.estate. Thank you guys so much. Have a great one and see you into our next webinar, which will let you know pretty soon when it's about to happen. Thank you so much.